If you're trying to build a portfolio and you're chasing rate as your number one priority, just go directly to the bank.
I think the perception with rooming houses has come from share houses. So people do think that you're getting a lot of people in there that are, mooching off Centrelink.
Underinsurance is the biggest issue that we see. Building costs, labour costs, replacement rates gone through the roof.
You'll spin your wheels, you'll try and get the cheap money rather than getting the money that's actually going to get you, or getting the funding stack that's actually going to get you the deal. If you actually already have a property inside of a self-managed super fund and you have a loan on that property.
When you are doing the same deal type and you're dealing with the same client type over and over again, your ability to get the options and the strategies to the client in a refined, fast manner.
No longer is a property manager just a rent collector for you.
For heaven's sake, if it's with one of the major banks, please get in touch with me. I actually helped a client that was on 10.74% get their loans down to about the 7.1% mark. That's almost a 4% saving. Hey buddy, welcome to this episode of Finance This Property That. Today, juicy topic. It's on the tip of everyone's tongues. It's trust lending. Yep, it's just got harder and limited lenders, but I'm going to tell you who still says yes and go through a few things. So today we're going to go through what's changed, how that actually impacts everyone and the greater scheme of portfolio planning, but also we're still getting deals approved through trust lending. So we'll also be talking about what we're doing that is different to others that still get approved. We're not failing, we're still producing results. So let's get into it. We already know that towards the end of last year, several lenders, and also at the start of this year, several lenders have either pulled out or not, well, one lender's pulled out or press pause, that being Macquarie. They're all over the news. So they've pressed pause on their trust lending very suddenly. There were a few reasons for that outside of ASIC and APRA, and also introducing some AML, anti-money laundering changes and how they verify trust lending. So they've pressed pause. Followed closely by CBA. Now, they did not press pause. They're still doing it, but you have to be a customer. i.e., you must have some form of lending with them. Then just recently, ANZ have come out and said, hey, we're reducing footprint on trust lending. We'll only lend again to clients that are existing clients of ours with existing lending. But they've gone one step further and have said, look, we're only going to lend 70% loan to value ratio, or LVR, to for trust lending. They also sneakily don't give you the carded rate. They actually load the rate for their trust lending, which is a kind of sneaky. Then just recently, within the last week, First Mac, pretty good with trust lending. They've come in and said, yep, we're still open for business. However, if you've got trust lending elsewhere, you must include all the trust lending that you have with other financial institutions in the servicing, and it must all service together. Now, that just means that there's tighter servicing and higher scrutiny based on where the income flows through. And fair point, there are some people that really abuse this rule, and there have been people online widely saying, hey, you can go to this bank and you just get this letter, or you sign this stat deck and it's just unlimited lending. It's actually not unlimited lending. It's still limited by your borrowing capacity. We do not ever want to get into a state where we've over leveraged ourselves, and your trust lending needs to service itself. If it doesn't, then you can't. Then you've got to include it in your. Servicing, because it relies on your income plus the income it generates to service. So those are a few of the changes. Look, there are still heaps of lenders that are doing it. We're still doing it, and I'm going to get into how we're doing it later on in this episode. But let's talk about the impact this actually has on lending and growing a portfolio. So, the obvious one is lender choice. We are restricted now in the amount of lenders. So as a portfolio specialist, or building out, debt structure and strategy is my niche. It now becomes very specialised lending. You're probably going to see a lot of brokers shy away. In fact, a lot of brokers don't even know how to write a trust deal. Yes, that is controversial. They may know how to do one, but there's a lot of ins and outs that people don't understand on how to set the structure up, what the structure should be, do the extra searches, do all the research before we even get to a submission. So what that means, obviously less lenders to choose from. There's less brokers that may want to do these because it's all in the too hard basket, and that's fine. We're still doing them. Again, we'll jump into later how we're doing them. Then that also, with some of the lenders, with trust lending, your borrowing power is generally lower. And the reason why I say that is trust lending, you can't negatively gear a trust inside a trust. The trust technically shouldn't be making a loss. Therefore, a lot of the banks don't apply the gearing. Asterisk, there are some banks that do see it that way, or some lenders that do see it that way. Again, comes down to policy and research. So lower borrowing power also is impacted by the amount of lenders that we can go to. If the other impact this could have is if you're with a broker that doesn't understand how to do trust lending, you are going to have a lot of delays, potentially declines, potentially you're going to lose out on property that you probably shouldn't have if your broker researched it properly. It's the same if you go direct to bank. Some of the bank lenders don't even know how to do trust lending. They know that they do it, but again, lots of delays, could be declined, and then you're coming to see someone like myself to throw a Hail Mary. We literally just had one last week where a broker didn't do the due diligence on the property, and there was a business loan supporting a business loan lent up against the security property inside a company trust structure. So client, now we're working with that client to get that business loan out into a different facility, transfer that loan out to the other lender that's doing the construction loan, and hopefully they can settle on their property because it's vacant land and they're looking at building. Fingers crossed that we can get it done, and we're almost done actually. It's taken us about 3 or 4 days to get it done. So let's talk about how do we get these approved and why we do things differently and why we get the most approvals. So, first and foremost, no application ever gets done with us unless we've done a clear strategy. Now you may say, well, what's a clear strategy? It's very simple. We do a full structural financial diagnosis of your current portfolio. We look at all your income. We look at where that comes from. We'll look at the policies with the lender. Then we also look at your valuations on the property, etc., to set you up. We then look at, okay, if we want to lend under a trust, have you spoken to your accountant? Have you got the trust set up? Is the structure correct? We work with your accountant to ensure that it's all correct. Now, some accountants may have different views on how to set a trust up, and that's fine, but they may not be setting it up correctly so that you can lend under that trust, because the lenders will have their own rules on how they want it set up. So that's why it's important, and that's why I feel it's important that we speak with your accountant, and it's a collaborative approach. P.S. You are actually involved in the whole conversation, and ultimately you get the final say because it's your finance and your tax. We just may be limited in where we can go if it's not done correctly. So there's that piece. Then we look at the research on who does trust lending, where does it need to go, does it all service with the income that we've verified, security, does it match, where do you buy, how do you buy. But not only for this one, we're structuring to future-proof servicing and not looking at the current loan. We're looking 2 to 3 steps down on how we can potentially go further down the track. More recently, We just did one. I just handed over a presentation yesterday for a client who we're potentially doing a 3-property purchase or 3 properties acquiring over the next 12 to 15 months. First one, because of the asset class, must be in a trust because it's potentially commercial in nature. The next one, we're going to talk to their accountant about, well, do we put it in a trust or do we put it in personal name? Because potentially they will have paid their home loan off in the next, I would say, 5 years with the way we've restructured their debt. So it is really important. This is why going to a generic broker or going to your bank will really limit your capability. Coming to someone like myself and my team who look at the bigger picture, we don't submit applications for the sake of submitting applications. We submit applications to get settled because that's the end game. Let's get it settled. That means that's when you own the property. That's when you start building your portfolio. We don't settle just for approval, or don't submit just for approval or to get numbers on the board. I'd rather wait till we get everything and then submit the deal to be able to get it settled. Hence why I just won Broker of the Year at the Australian Mortgage Awards for this particular way we do things. It works, go slow to go fast, and we'll get there. Doesn't matter how long it takes, but we'll get there safely, and it won't stunt your growth. It will keep you moving forward. That's the end of that episode. Little bit tidbits on trust lending. It has gotten harder. It has gotten restricted, but with the right strategy and with the right specialists like ourselves, you can get it done if it's the right thing for you to do. Look, like always, the information on this podcast is very generic in nature or general in nature. If you want advice specific to your current situation, hit me up. I'm online on Instagram at Dion Finance Specialist and also on LinkedIn, Dion Fernandez. This podcast is everywhere, Apple, Spotify, YouTube. Jump on there and you can jump on the podcast website, www.financespropertythat.com.au. But until next time, see you on the next episode.